Before cryptocurrency, NFTs, and the Metaverse, there was the Forex market. It's still today the biggest and arguably most important financial market in the world. And while stock trading has become hugely popular in recent years, a lot of top traders actually credit the majority of their profits to the Forex market. Hey, welcome to the channel. I'm Kylie, and by the end of this video, you'll know how Forex works and why it exists. And remember, this is just a general overview and not financial advice. Okay, let's jump into the video. So what is it? Foreign exchange, or often referred to as Forex or just FX, is the trading of global currencies. It's essential to carrying out international trade. Trade can't take place without trading currencies. So for this reason, foreign exchange is the largest and probably most important market in the world. And like with anything that is bought and sold, it also presents opportunities to make money. You trade currencies to make a profit, to diversify your investment portfolio, or because you're trading goods globally and you want to stock up on other currencies while the exchange rate is low. You would have come across this yourself if you'd traveled overseas, for instance, using your card to pay for things. When your local currency suddenly falls relative to the country you're staying in, your holiday suddenly becomes more expensive. But if you were extra clever and predicted that your local currency might fall ahead of your holiday, you could have exchanged currencies, say, months before your trip and saved on the future higher costs. This is what major institutions and global traders do day to day. They try to predict which currencies are going to rise in the future to either save on costs or make a profit. For that reason, Forex trading was previously the domain of big institutions, governments, and large banks. And of course, they're super wealthy. But in recent years, it's become extremely popular with everyday retail traders like you or I. One, it's a 24-hour market, so trades can be made whenever you like, unlike, say, certain stock markets. And two, because you can make big profits really quickly. But of course, this means you can also lose a lot very quickly. But the biggest reason is, of course, because it's now really easily accessible through dozens, if not hundreds, of Forex trading platforms available to pretty much anyone over the age of 18. It's now easier than ever to trade Forex. Before I go on, if you're finding this video useful, please hit the like and subscribe button to tag along with more investing videos like this. Okay, so what impacts exchange rates? Well, like the stock market, currency prices all depend on supply and demand. On the supply side, you have central banks like the Fed controlling how much of their local currency is in circulation. And they do this by buying and selling their local currencies with other central banks and governments, by printing more money, and by buying and selling government bonds. There are loads of factors that impact the supply and demand of currencies, including interest rates, government policies, and the health of individual economies, and crises like COVID-19. So to successfully trade Forex, it means understanding the international currency markets, as well as many economies and political signals. Okay, so that's all the theory behind it, but how do you actually trade it? So as you know, Forex involves buying one currency and selling another. This is known as trading currency pairs. That is, going long on one currency and short on another currency. It might be easiest to think of each currency pair as an individual product, which is bought and sold. Let's break this down a little further using the example of the AUD to USD currency pair. So the first currency listed, the Australian dollar in this case, is known as the base currency, while the second listed, the US dollar, is the quote currency. If this pair was listed at 0.76, you would be buying Australian dollars at a rate of 76 US cents per Australian dollar. To actually make money, you need to see the value increase relative to the US dollar between when you buy the currency pair and when you sell it. Okay, so that's how Forex works. Now I want to tell you how people actually make money from it. So stick around until the end of the video where I'll take you through how to invest $1,000 in Forex and some extra tips and tricks. How do most people profit from Forex? Well, regular people can just sign up to online Forex trading platforms. In most countries, it's hard to trade Forex directly unless you have a lot of money. So regular traders often don't physically trade currencies. Instead, they use contracts for difference, or CFDs. So CFDs are derivatives contracts. They were banned in the US following the GFC, but they're still very actively traded in countries like the UK, across Europe, and in Asia. Rather than actually buying and selling currencies, you use these contracts to place bets on currency price movements. And you typically do this using leverage, which means that you're using borrowed funds. So you only need to deposit a small amount to get a lot back if you make the right bet. Of course, it also means that you can lose a lot more than what you initially put in. Let me give you an example. Let's say you have $1,000 you want to trade. You can open a CFD account with an initial deposit. The size of the initial deposit depends on the amount of leverage that's being agreed with by the broker. And you'll probably hear this referred to as a ratio of sorts. For example, the leverage ratio may be 50 to 1, or 100 to 1, or 200 to 1. For an account with a 100 to 1 leverage ratio, you need to have a cash deposit of 1% of the total invested amount. So if you want to trade $100,000, you would need to have a $1,000 deposit. It's really important to note here that if you place a trade and it runs against you by more than the margin you've put down, so in this case more than $1,000, you'll have to top your deposit back up to $1,000. This is called a margin call. If the market keeps moving against you, these margin calls will keep on coming. Just as a tip, it's usually best to focus on the currency pair while you're getting the hang of it. Tracking the movements of multiple currencies can be a real headache, especially if you're new to it. A second point is that you should decide on your trading strategy before you actually get started. So make sure you actually have an appetite for doing the analysis that you need to confidently manage your trades. Thanks for watching. If you liked the video, don't forget to hit the like and subscribe button and stay tuned for more investing content. Also, would love to know if you're interested in seeing more Forex videos. Leave a comment in the comment section below.